Hello, everybody. This is Brandon. It is now September 4th, 2024. It's about 5 minutes until 1 a.m. Eastern Time as I bring you this. And I mulled over whether I should do this video or not, but I decided I will, partly because I think this particular stock that we're going to be talking about reports earnings pre-market in the next, let's say, 5 hours. And that is Dollar Tree. So, Dollar Tree stock is sick, just like Dollar General and all of the other consumer related stocks that appeal to the lower end consumers. And so that's what we're going to be talking about. Here's the disclaimer. Pause it, read it. If you agree, please move forward. And what I really want to do from this perspective is just to go over just some charts, and I'm not going to go over the earnings estimates and things of that nature. I'm just going to show you that this market is sick, and these lower end consumer stocks that are retail are going to be showing us that we are heading into recession and that the consumers are dead. And kind of my thoughts on what our group over at Galaxydoc Market is doing, and also to help you potentially find some trade in this. I don't think this stock is, if they report good earnings, obviously it's going to go higher. I just don't think that's going to be the case. But without further ado, let's talk about what we're going to do. Here's X.com, my shameless plug, Galaxydoc Market. And please like us, subscribe to us on the YouTube. Thank you for all the subscriptions, and we really appreciate it. But I am dedicated to what we want to do. This market has been a doozy. We've been active in the futures market, and I do believe the next leg down is coming. But you can never count on, dismiss the ability of the Fed or the central banks or whoever the powers that be to rescue this market. However, we've been looking for this, and you can look at all of my videos that I posted over the last month or so. You can see that we were bracing for this type of action. I've been warning you all that this would happen. Now, this is last week, and if you want to look at my previous video, the weekend review video, we talked about DG, Dollar General, warning of catastrophic decline in lower end consumer action. And I don't think this is going to be relegated to just Dollar General. It had a 36% decline in prices. And so I think that's probably going to spill over into Dollar Tree, DLTR. And we're going to go over why we think that. Now, here's ES. I just took a snapshot. I had a hell of a day, field day, dealing with this. And our group really has a longer term SPY puts, and we do combination of ES tradings, and we got some VIX calls and all of that. That's for you to find out. If you want to look at joining our group, please email me at coachbrandon@protonmail.com, and we'd love to have you inquire and find out what we're doing. And this is, like I said, I think the market's going to get very violent and volatile ahead of the earnings, and not earnings, but elections. It's late, guys, but sometimes you don't sleep in this type of market. All right, so, and I'm showing you this partly because this is today's announcement. This is from September 3rd. And of course, I do my morning commentaries, and I comment on things as we go. And I don't think it's just ISM that caused all of this conniption. But we also took some positions on Zscaler. You can see that we took 185, 180, and 175. And I said it's the most risky. However, find out how Zscaler is going to be opening up. I do believe it's going to go much lower than 165. But this is the one that we're talking about here. You can pause it and kind of get an idea of the depth of market analysis that we do. But we call for a Dollar Tree 96 expiration, 75 put. It is high risk, high reward. No one should be front running earnings. However, there are certain stocks that deserve to be ran. We do a combination of options, gamma, theta, and the Greek analysis to find the perfect premium, whether it's worth front-running earnings or not. I don't encourage it, but there are some times that you do need to front-run earnings. You don't have to, but it can be very lucrative. All right, so having said that, let's get into the technical analysis. So as you can see, Dollar Tree is completely beaten up. Okay, just 1 second. Sorry about that. There's not much to say other than the fact that a lot of people think this is too beaten up to even consider doing anything with, and they are far from the truth, because while we are in, a lot of people like to think of RSI as an overbought, oversold indicator. It is not. It's just a momentum indicator, and right now it's telling me the momentum is getting more negative as it's been falling off, and it is. Look at this huge gap in conjunction and following the Dollar General earnings report last week. And I believe that's what this is all about, right? The price action. Now, what we want to be focusing on is this increasing volume that's happening and this trend that has been coming down into a defined channel that we're looking at. And this channel down is clearly a descending channel, and then we became impulsive from there, and then now we have a phase 3 impulse, and I believe we're going to go much lower. Okay, but I just wanted to go over why it is that we think this is more bearish. First and foremost, we're looking at the CCI, and it is trending to the downside. There is no divergences here. It is a stock that is in trouble. Even the stochastics are divergent. And then when you look at my famous PPO ADX crush indicator, these two things right here that we have are basically forming this formation, and that's bearish. Okay, so that bearish formation is something that I always look, and this is a perfect formation. Accumulation distribution, I mean, it's basically trash at this point. Okay, so why do I think that there's more downside coming? And I could be wrong. Partly because I think the lower end consumers are basically either jobless or looking for jobs, or they not making enough money. The inflation, gas, and everything else has hurt them to a point where they're basically not even shopping at these stores anymore. Okay, a lot of people think these type of stocks are recession proof, and they are not. They are not recession proof. In fact, they are the canary in the coal mine, as I like to say, or a leading indicator of the potentially being in recession. I know people are saying, well, no, we're not going to be in a recession. The Fed's going to fix it all. Fed is never, ever right about these things. And in fact, I believe they cause these inflations, recessions. Now, this is the one that I wanted to talk about, and this is why I'm up at 1 a.m. basically doing this video ahead of the earnings, partly because it's something that I wanted to share. We've got a, and I know you're probably going to say, well, it's been like, constant bearish formation, and then it broke out. Well, it's formed ahead. To me, this is the right shoulder and left shoulder. I've seen these type of patterns play over and over again, and I believe we are right into this neckline. This red candle was today's action. Post earnings, if they report anything relatively similar to Dollar General, I believe we're going to target to these levels, right down into the 70, all the way down and below into the $55 region, denoted by this red volatility box that I've drawn. MACD continues to get negative, okay, and it is basically in a dire situation. And in fact, I guess you can maybe call this a flattening. I think we're just basically going to continue to come down. We have the CCI, which is a leading indicator. We're not completely oversold. I do believe we will be after they report earnings and if they sell off. And we have all of the space in which it can drop down to. And that's, I think there's going to be some massive sell-off that is coming onto the stock. So stochastic is, the only one that might be showing some bullish divergence, but you're not really supposed to use stochastic for that kind of stuff. Again, PPO ADX is bearish. accumulation distribution, we have a lot of room to fall. If people are dumping this, and I assume if they blow their earnings, this is what's going to happen. And so here's the ATR. I like to use this as a momentum indicator and change in direction. And if it starts to increase after the sell-off, that may happen. Now, don't get me wrong. I mean, this is highly risky trade that we're embarking on, and we're fully aware of it. We don't put our entire account into this. However, I do believe that if they're going to report anything remotely similar to what Dollar General did, this should be an easy 10x, 20x trade. Okay, so that's kind of what I wanted to share with you. As always, go to x.com and follow this hashtag consumer demand destruction. It's alive and well, and this is what's driving it. Don't let anybody else tell you that it's not. And we are headed into a recession, or we may already be in a recession, and the leading indicators are these lower end consumer retail outlets that start to have problems. So keys to Dollar Tree earnings result is low end consumers are dead. We talked about consumer demand destruction. Will Dollar Tree follow in the footsteps of Dollar General? Very well, maybe. Long-term 10-year weekly chart showing very ominous chart pattern, and that's what I shared with you. We talked about ES. It has likely started the next leg down unless a major rescue operation, which always can happen, right? I've seen these long candles come in, but we've been busy shorting this, and we have long-term VIX calls and SPY puts, and I kind of shared with you what goes on in our group. Okay, if the earnings corroborate a DG style collapse, $65 to $55 price target is possible in the next 2 weeks, and I don't believe that you have to front run this to make money. Okay, for all I know, markets may pump this higher after earnings and then start dropping it. But if the ES continues to sell off and we start crashing here, nothing is immune. Okay, you got to short the rips if it happens, or if you've been making a lot of money, you can basically front run certain earnings here. Okay, recession is coming. Consumer demand destruction is here. Thank you so much for watching. Follow us at Galaxydoc Market. Like us, share us, and above all, comment good and bad in this video. And share. Get the word out. Okay? And please subscribe. We love subscribers. Okay? And let's get some alpha. If you're interested in doing some business with me, like joining my membership group, please reach out to me. I'm on WhatsApp. Reach out to Coach Brandon at protonmail.com. Okay? And otherwise, be careful out there. But I do believe being overly bullish in this environment is very detrimental for your financial health. All right. Anyways, good luck. I hope this information was helpful. Thumbs up, like I said, and follow us. Thank you so much. I'll talk to you later.